Pests beware, your fields have heroes. The Pests and Predators podcast is brought to you by Field Heroes and is powered by the Western Grains Research Foundation. Learn how beneficial insects fight pests and protect your crops. Visit fieldheroes.ca today.
Let's talk markets here on this Wednesday. We're joined right now by Neil Townsend of GrainFox, based out of Winnipeg, Manitoba. How are we doing today, Neil?
I'm doing well. I wish the Jets would have won last night, but hey, still not dead.
Are you worried yet?
A little bit.
Yeah.
Didn't score enough goals. Can't stop enough goals.
Yeah, Hellebuck's been a little bit disappointing, hasn't he?
Yeah, he's playoff Hellebuck and regular season Hellebuck seem to be two different things.
It could be worse. It could be Austin Matthews.
True.
Okay, so Neil, given some of the tight new crop ending stocks reported by USDA for soybeans, I believe it was around 295 million bushels, and corn's at 1.8 billion bushels. How do you view the potential for market volatility and direction here in the coming months?
Yeah, I mean, there's probably two things. Like there's the fundamentals, which we're going to talk about, and then there's all the politics and, tariffs and trade and all those issues. So, I think there's going to be a lot of volatility because there's going to be a lot of the latter. But I also think you're correct to point out that there could be some volatility in and around the ending stocks numbers, because if we start with soybeans, 295 million bushels is on the threshold of being tight. If we see some weather or we see the circumstances such that exports or domestic usage kind of compel them to sort of nudge that up for 25, 26, I mean, you get into a scenario where there's less than 200 million bushels. And I think soybeans is pretty exciting. And the market reaction so far with soybean oil kind of rolling, I mean, people will say that might be for some other reasons, not just straight fundamentals, but there is the tinder for something to happen in the soybean and the oilseed complex. Corn also, I think 1.8 billion bushels is a interesting number because we're talking about a significant increase in acres. We're talking about a yield at 181, and all of that work increases U.S. Corn ending stocks only to 1.8 billion bushels, about up 300 or 400 million bushels from the year before. So imagine a scenario where exports have some incremental upside. They go up by 100 or 200 million. We have some weather that threatens 1 or 2 or 3 bushels an acre. And we're right back into that sub 1.5 billion bushel range, which I think is very supportive for the broader market.
Okay. Even for corn?
I think corn, as long as there's no significant policy change to the ethanol mandate, once you get below about 1.5 billion bushels, maybe the term shouldn't be very supportive. It is supportive. If it threatens to go sort of closer towards 1 billion bushels, then, you could get some excitement. And I mean, I think there's enough sort of weather issues right now. It's early in the season, not necessarily in the U.S. Corn Belt, but in other areas where you'd say, Mexico remains dry. It's drying out a little bit in the Black Sea region. The Chinese plain, the central Chinese plain seems to be very dry, giving them some concern about their wheat crop. So, just watching. And of course, unfortunately for us, I think there's some really weather concerns about the Western Canadian prairies and the northern plains of the United States. It's very dry there. So it's not hard to find, usage of corn going up by, say 3 to 5 million tons. That translates to about 120 to 150 million bushels. That ends up being somewhat supportive.
Yeah. Well, it's Mother Nature, and Western Corn Belt. You look at parts of Nebraska, all dry as well. Wheat. What about this? New crop wheat ending stocks 923 million bushels. Wheat market wise, hearing a lot of producers like, oh my goodness, the wheat price. What's going on here, Neil?
Yeah, I think wheat is. The big unexplainable, or I mean, it can be explained, but it's the difference in 24, 25 that's kind of dampened wheat is that overall world demand seems to have slumped a little bit in terms of trade demand. So we haven't seen the level of imports. Now, that's a very rare event. If that goes back to where, we see a 5 to 10 million ton increase in world import demand, then, things get a little bit more interesting. Now, focusing on the US ending stocks, it's sort of like the world residual. It's not really the key number. For the North American market, obviously going up, it becomes a little bit burdensome. But I think where we want to watch is we want to watch like what's the end result with Ukraine and Russia, both in terms of, their production, but also in terms of the trade and the trade issues. Like, we got the EU sort of many countries there sort of protesting, Ukraine's access to their markets, and that's a reflection on the fact that, wheat prices are dampened and feed grain prices are dampened right now. So farmers aren't necessarily happy ahead of a, new crop harvest, a little ways away, but it's coming and they know they're going to have more and they're worried that there's going to be a lot of Ukrainian. But I think like Ukraine itself, analysts there have started to cut their production back. The Russian production is going to be maybe the same as last year or slightly above or slightly below. I mean, there's still some key growing region time to go. And then we have the European Union situation, which looks like they're going to be bigger crops, but, the quality issue is still to be decided. It's still lots of rain in France and stuff like that. So, and, we know North Africa, the western part of that's very dry, Mexico, very dry. And as we aforementioned, North America doesn't look great right now for spring wheat.
Talk about the US dollar index, and I heard a whole discussion this morning on Bloomberg Radio, our dollar, your problem. How is this impacting some of the demand out there potentially going forward here in the rest of 2025 on ag commodities?
Yeah, I mean, it's pretty interesting. I mean, I think if we look into the macroeconomic and the geopolitical sphere, I think one comment that I would make to all farmers is that, like, when we talk about 25, 26, for the Canadian marketing year, it starts August 1st. For the US marketing year for the row crops, it starts on September 1st. To understand what regime will be in place at that time in terms of the tariffs and the trade issues, it's hard to say because, I mean, it's a day-to-day, moment-to-moment issue. And I think the US dollar is also very, very tied into that. So we saw that, when they did do some discussion with China and they seemed to ease off the tensions there, we saw the US dollar sort of rally for a bit. Other people think that the US dollars, the trend will be down. And, so we're going to see a stronger Canadian dollar, stronger euro. And we've seen that over the last several months. But I don't think I'm smart enough or have enough knowledge to know where the US dollar versus the Canadian dollar will be for the 12 months that constitute 25, 26. The Canadian dollar has been beat down for a long time. We've traded in that, sub 70 cents, but in reality, we've traded sort of in that, 70 to 74 cent range for quite a while. So do I think we're going to see a significantly weaker Canadian dollar? No. Do I think we're going to see a Canadian dollar that sort of like goes above 75 cents? No. So that leaves us in the same range. And I think that, how much will that impact our, behavior? I don't know. And then finally, I think like, obviously, if we're going to have the tariffs and the US policy be sort of viewed largely as detrimental to their own economy, we probably think that means that the US dollar will continue to weaken. My only comment there is, again, like September 1st is a long ways away. And we just don't know how important tariffs and trade issues will be in those 12 months. Like, they could be on to other things. It could be like, we did that. It's sort of resolved. So I don't know.
It's interesting. Well, we a lot of concern about inflation and what the and what the Fed's going to do. But yesterday there were some inflation numbers out of the U.S. and its really didn't look like any impact at this point, given what some of the expectations were.
Well, that's right. And I mean, again, like the job of the market, I mean, even for grains and oilseeds, is we call them the futures markets, right? They're trying to predict what's happening in the future based on all the information they have today. And a lot of, again, I don't think Trump's policies are that well thought out. I think they're going to have a detrimental impact. But just because I think that, and millions of other people think that does influence behavior, but it also isn't sort of, the data is the data. So we're going to have to watch and wait to see what the data is as we go forward. And maybe it will be, worse or better than we think. it's hard to make a decision because this is a multifaceted world and we have a lot of variables in motion. So going back to something you said right at the start of this interview was you said like, will this contribute more volatility and uncertainty into the market? And I think that's the big thing that's sort of driving, negative inertia is that there's just a lot of uncertainty and volatility. And, if somebody were to come to you and say, okay, the US is going to make a major change in ethanol policy, like you can't really completely discount that. Like that's in the realm of possibility right now, right? Like they could do that. I mean, I don't think they will do that, but they could do that. So, I mean, I just think like preparing for next year is going to be challenged by the fact that we probably should expect volatility and uncertainty. What does that mean? That means that probably like, incremental selling, taking victories when you have them, like when you can sell above your break even and move a bit. Think about the total farm approach in terms of like, I might sell a little bit more of this just because, it's offering good returns right now and I'll hold back something else using your storage strategically, which all Canadian farmers do. But just that kind of thing, I think will be very important this year. It's going to be sort of an active marketing year. And the one thing I would caution farmers against is, don't feel hopeless. Like obviously there's lots of things you can't control, but what you can control is like, growing your crop as much as Mother Nature allows you, and then, just strategically thinking about its disposition. Like, how are you going to do that, and why are you going to do that?
Yeah, like I think, last week the US had their announcement of their UK trade deal. There was obviously talks with China over the weekend. I think that's where a lot of the eyes are from a commodity market perspective, is if there is some sort of official deal, but that is kind of phase one like
Yeah.
in terms of like being the world's largest grain contract. The announcement of that is an opportunity of volatility from a news perspective to be watching out for.
Definitely. I mean, and again, remember, like, the world keeps spinning despite what the politicians are talking about. And one issue that might come up is like if things are as bad as they look on weather maps for the northern China or the central China plain where they grow the wheat, like, China can kind of save some face by throwing the US a bone and saying like, oh, it just so happens we need some grain. Let's write in there that, we need 10 million tons of corn and 5 million tons of wheat. So there's lots of ways to kind of, peel the onion, I guess is what they would say. But I'm just saying like it's going to be very interesting.
And it doesn't, I want to put this, the Russia-Ukraine war has, the market's just totally numb to it. Whether it's the war is ending or it's going to keep going or there's going to be a meeting or not a meeting, it doesn't seem like it really moves the wheat market in particular or some of the oilseed markets.
Yeah, I think what we've learned here is that, Ukrainian farmers and to a certain extent Russian farmers are extremely resilient. They can grow and produce crops under conditions that, you would think, how do you even keep going, right?
Yeah.
And, weather's maybe cooperated for at least the first 2 years of the war and giving relatively good yields, maybe not as much last year. But yeah, I agree with you wholeheartedly. And again, the markets are very adaptable to what the conditions are. And I think the market right now is basically saying that, the war didn't disrupt trade as much as we thought it would. And probably the market is also saying that a peace deal won't disrupt the market as much as we think it would. So I don't think there's going to be, if the war gets settled, we might see a brief moment where wheat prices go down a little bit, but I don't think it will be a major drop. And I think, that will be out of the market in a few days. Now, again, I don't know if we'll see a trade deal. They're still trying to, get Putin to come. And I'm not sure if he thinks it's in his best interest, but there's something going on maybe in Turkey this week, or we'll see.
Meetings everywhere. Hey, quickly, I know we're up against a hard stop here, but I want to get you to comment on canola.
Yeah, I mean, I think canola, obviously, we're a little bit horse blinded here by the fact that we don't have a benchmark supply and demand balance that we can really rely on in terms of, it looks like things are going towards a negative carryout because the usage is so high, like if we were just to use straight Stats Canada data. But I mean, I think the expectation is that what we've shown here is that even when there are some hurdles and some, headwinds, the canola market is resilient. And I think we got to remember that it's a premium oil seed. The oil content is strongly valued. The meal is also valued, but the oil content is strongly valued, and we can find a market for it even when we have struggles with two of our main markets, the United States, A, and B, China. Now, I think the U.S. situation is probably going to be resolved, in particular if there's a lot of reasons probably for them to put restrictions on the used cooking oil beyond just mere like trade and tariff issues. I mean, that's a market that's, it's dirty oil to begin with, and it's sort of a dirty market. So you can see why they might do that. And I think that raises what, domestically produced soybean oil in the US and also Canadian canola oil. So I'm pretty optimistic about canola right now. I think the price can hold. And then I think there's upside, especially if we start to hear these narratives about, a very dry summer or hot conditions in Canada, because I mean, there really isn't another crop that, the European crop or the Black Sea crop, they look ordinary at best, not something that's going to tilt the supply and demand balance.
Neil, appreciate you joining us here today.
Yeah, thank you very much, Sean.